Hey folks, CA Rachana Ranade here and I welcome you all to the IPO summary video of Shadowfax Technologies Ltd. First things first, let's understand what does the company do. Well, it's a third party logistics company. Means what? It is mainly into the business of logistics. It's going to help companies to deliver their products to the end customer. So does the company have their own products? No, they are going to just help the movement of goods from the seller to the buyer. Simple. It's a logistics company. They are focusing on enabling digital commerce in India. Why are we saying enabling digital commerce? Because they're going to serve e-commerce, quick commerce, food delivery, and mobility platforms. Okay. Now, the moment we say e-commerce, quick commerce, food delivery, I'm sure you might have already guessed who their clients might be. Of course, you might have thought about this. It could be something like Meesho, Flipkart, Myntra, Swiggy, Big Basket, Zepto, Nykaa, Blinkit, la la la. All these are their clients. Now, you can imagine something like this. Let's say you place an order on, let's say, Zomato. Okay, automatically there'll be a pop-up on Shadowfax's technology platform that yes, an order has been placed on Zomato. The delivery partner will collect the order and the delivery partner will actually deliver it to the customer. Okay, now you might be like, how will Shadowfax understand that an order has been placed on Zomato? And exactly for that, the company also offers API integration solutions for B2C logistics. So API integration for non-commerce or non-science students like you and me, it's as simple as this. It's like a bridge is built between whom and whom, between two platforms, so that they get to know about all these things like orders placed. Okay, now whenever I'm talking about Zomato or Flipkart or Meesho, what different types of orders could come up, let's understand. They do all these types of orders. Okay, for example, if there is an express order, means you have to deliver that within one day, or let's say there is a reverse pickup logistics and hand in hand exchange. What do we mean by this? Let's say you ordered something from Flipkart. Okay, you didn't like the product, you want to actually return that, but simultaneously you've also ordered for a new product. Okay, so what will happen? The delivery partner will come, he'll hand over the new product, he'll take the old product in return, and then he'll go. So that will be like a hand in hand exchange. Okay, reverse pickup logistics. Is that service also offered by this company? Yes. Hyperlocal quick commerce services, the example that I gave for, let's say, Zomato or Blinkit for that matter, something like quick commerce, Blinkit, Swiggy, Instamart, Zepto, they also offer delivery for such services, and also other logistic services, something like you can imagine high end products, technology related products, which have a high ticket size, those will be covered in other logistic services. Okay, so let's go back. I hope you have understood by now very clearly. They are a logistics company, they are going to enable digital commerce. Are they going to provide all these services end to end, express logistics and all that, hyper local? We just did discuss about that. And very important, they also position themselves as full stack first mile. First mile means what? Pick up from sellers, that will be the first mile delivery. Okay, what is second mile delivery? This is like a mid mile. Mid mile is basically delivering to the sorting centers. Okay, because in the sorting centers actually the whole process will take place, where let's say all the Maharashtra related deliveries will be sorted at one place, other states will be sorted in different places. So that's like a mid mile delivery to the sorting center. And ultimately, what is last mile delivery? That is delivery to the end customer. So all these, be it the first mile, be it the mid mile, be it the last mile, all these deliveries are taken care of by whom? By this company. Okay, wait, now one important point. This point says that if I were to talk about these services, express service, where I talked about one day delivery, hyper local like a quick commerce, and high ticket size products, where does actual revenue come from? If I'm talking about 6 months period ended data, highest percentage wise revenue has been generated in the express delivery, like a one day delivery or hand to hand exchange delivery. That's 68.6% of the total revenue. Hyper local is almost 20% of the revenue. If you remember, hyper local is like the quick commerce services, and ultimately other logistic services accounts for roughly 11.5% of the revenue. I hope it's absolutely clear till now. In the next section, we'll talk about KPI and other details. Now, if I were to understand about the KPIs, see, these are very logical KPIs. Ideally, if I'm talking about a company like Shadowfax, wherein they're going to generate revenue from the deliveries, in that case, should the number of deliveries or should the number of orders go up? Yes, that's what you should check as an important KPI. Number two, more and more pin codes that they serve. Is that going to be a good point for them? Yes, you can check that as a KPI. Number three, if you see that if the number of delivery partners are going up, if that be so, it's a good one for the company. So all these KPIs, if you now check on screen, you can see express orders, all these are in an increasing trend, hyper local in an increasing trend, total orders is also in an increasing trend. Now period and on period growth of orders, the percentage at which the orders are growing. So are the number of orders going up? Yes. So if you can see here, in millions, the number of orders have gone up from 259 millions to 436 million, but the pace at which these orders have grown, that is decreasing from 72% to 35 to 24%. Okay, so the pace of growth is slowing a bit. Now, if you see pin codes reached, that is also increasing, and how number of touch points has increased. Overall revenue, be it express revenue, hyper local revenue, other revenue, other logistics revenue, all are in an increasing trend. Let's check directly revenue from operations. You can see from 14,000 million to 18,000 to 24,000 millions, revenue is in an increasing trend. But what about the percentage increase in revenue? Same thing, the growth of revenue, okay, percentage growth, that is slowing down from 42% to 33% to 31%. Of course, with a higher base, the pace at which you grow, that can slow down a bit. Okay, now if you check about adjusted EBITDA, it was in losses till 23. In 24 it came into profit at the EBITDA level, I'm saying, and similarly for 25. But if you're talking about profit and loss for the period, they were in losses up until 2024. 25 is the first year when they have become profitable. Okay, so these are about key KPIs. What about the industry analysis? Now if you see overall, if I were to understand for FY25 and FY30, which is projected, overall the access to internet is growing, and of course if you see the China comparison is also given here. So if you check access to internet, we have 65 to 75% of the population who have access to internet. Out of that, smartphone users are 63 to 71%. Digital transacting customers are 56 to 65%, or digital transactors as they say. But the problem is with online shoppers. Even though internet access is to 75% of the people, only 25 to 29% of the people are actually online shoppers. And this is also projected. Currently, it is at 17-18%. 30 financial year 30 also, it will barely go up to 29%. So let me again repeat. Currently we are at what? 17 to 18%. Now compare this with China FY25. They are having 67% of their shoppers as online shoppers. So if you see overall for access to internet, it's not like a crazy difference, but at online shoppers level, it's a big difference, right? Now, overall retail market, if I again were to check from financial year 20 to 25 to 30 projected, it is in an increasing trend. For CAGR, if I were to check for 25 to 30, quick commerce is set to increase at a CAGR of 50 to 62%, e-commerce at 15 to 20%, organized brick and mortar at 16 to 20%. So, if this grows at this pace, is that going to be good for this company? Answer is yes, because higher the quick commerce or bigger growth in quick commerce or bigger growth in e-commerce, that is going to impact more and more deliveries, more and more orders, and it will have a positive impact on a company like Shadowfax, right? Talking about overall e-commerce excluding grocery, again that is expected to increase at 23 to 27% CAGR. Absolutely good one. But the point now that I want to very specifically mention, if I were to understand about overall Indian logistics market, see, agreed, online shopping is increasing, this, that, everything agreed. Question is Indian logistics market, at what pace it is estimated to, I mean, at what pace has it increased? It has increased at a CAGR of 2.5 to 5% since 2020. So from 2020 to 2025, CAGR has been only at 2.5 to 5%, and unfortunately 2025 to 2030, logistics market growth has not been mentioned in the RHP. At least I did not find it. I tried to find a lot. If you do find it, please let me know in the comment section below. Now, talking about the financials, nothing much. As I mentioned earlier, revenue is growing, and the revenue CAGR 23 to 25 is at 32.51%. EBITDA, PAT, I can't calculate the overall CAGR from 23 to 25 because EBITDA, it was at negative for financial year 23, and PAT anyways has just turned positive, so would not want to calculate it for this one, right? Talking to about key risks, now very clearly company has mentioned that we have incurred losses and we may continue to experience losses and negative cash flows in the future as we anticipate increased expenses in the future. That is one of the key risks company has mentioned in the prospectus. So always whenever you are analyzing any company, do analyze it from a 360 degrees perspective. Don't only focus on positive points, you should also analyze the risks. One more risk they have very clearly mentioned about what is the client revenue or client concentration as we call. 48.9% revenue is generated only from their single largest client. They have not mentioned which client, but 48.9% revenue comes only from one client. Even if I talk about top 5 clients, 75% revenue is generated from the top 5 clients. So is that a risk of client concentration? 100% yes. Okay, nothing specific about litigations. Honestly, if you want, you can dig down deep, but I did not find anything specific that I would want to comment on. Talking about valuations, if you see, I have not considered price to earning for a simple reason, because as I mentioned, it has come into profits only in this financial year, so better to go ahead with a price to sales. If you check for Shadowfax, price to sales at the upper band would be at 2.8. Delivery as at 19th Jan, we have taken the details from screener. Delivery would be at 3.4 price to sales, and Blue Dart would be at 2.2 ka price to sale. So if I were to take this as an industry median PS, that will be at 2.8. So it will exactly match with the industry median price to sale. So neither, based on this, doesn't look overvalued or undervalued, based only and only on price to sales, right? Talking about IPO details, opens today 20th January, closes tomorrow on आज काय 20th से हो, opens today 20th January, closes on January 22nd. IPO price band is 118 to 124. It's a split 50-50 roughly, fresh issue of 1000 crores and offer for sale at 907. Now what are they going to do with this money for offer for sale? They have very clearly mentioned that funding of capex requirements in relation to their network infrastructure. Typically for mid-mile, they require this capex. It could be for all these conveyor belts which are required for segregation. It could be their computers. It could be CCTV and all that, right? Also, lease payments for their first mile centers, last mile centers, sorting centers, that is the mid-mile centers. So all these, they have also for branding, marketing, they're going to incur certain costs. So that is it about the objects of the offer. That's a quick summary of almost a 500-pager RHP for you. I hope you enjoyed this short and sweet summary. If you have any other important points that you feel everyone should know about, please let me know that in the comment section below. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.